There is currently very exciting data here that definitely scares me. For example, we see that the Ethereum ETF has only had outflows in the last 24 days. It did not have a single day of inflows. And that worries me, because in the past we could see that the bull run was over, when we no longer had institutional interest. Here in 2021, from the point when we no longer saw inflows in the Bitcoin Trust, the bull run also slowly came to an end. And we ushered in the bear market. We have had inflows in the Bitcoin ETFs all this time, since February, March. But now, we only have outflows here, and accordingly, this could slowly usher in the bear market, at least one might think. We absolutely need to talk about this now because these are very important data that will definitely decide our future. But before we continue, friends, as always, leave a like and a comment. I rely on your support. This video was also a hell of a lot of work. Now I'll first explain to you whether we are moving into a bear market or not. To complete a cycle and move into the bear market, we need the crossing of these two average lines. Every time in the past, we have moved into the bear market from that point. And if we look at this here, we can see very clearly that we are still very far apart. This means we are absolutely not going into a bear market anytime soon, at least according to this indicator. Additionally, we also see, for example, that Bitcoin exchange reserves are continuously decreasing. More and more Bitcoin is flowing away. If we were expecting the end of a bull run, we would see inflows here, because then the big whales would gradually dump their Bitcoins on the exchanges. We would see inflows here, but not outflows. That means these are already good signs. What is also a good sign is that we see here with the Bitcoin addresses holding less than 1 Bitcoin, they have sold recently. This means it's the retail investors who have sold here. Because if we look at the people holding over 1,000 Bitcoin, they haven't really sold recently. It gets quite interesting with the whales holding over 100 Bitcoin. Here you can see they have been buying very aggressively recently. That is extremely important. Because if we were to assume that this was the top and we are now moving into a bear market, we would have also seen that the people holding over 1,000 Bitcoins would have sold aggressively. But that was not the case. However, that was the case in the past. Take a look at it. When we rose so sharply here, we only saw outflows from the whales. It's even more evident here with the whales. When we rose so sharply, we only saw outflows here. The rails addresses only sold, and that would happen here too, if one were to assume a bull run, but that is not the case. We see it, if at all, from the whales. Further inflows, both of which are extremely important signs and indicators that are very telling in relation to a bull run or a bear market. And this is very interesting here. While the masses are now full of fear, despite rising car prices and tariffs from the USA, the big players continue to buy Bitcoin. They are not panicking here, and some are being deceived here now. We are now seeing further phases of increase. We are dropping in price here, while retail is selling and the big players continue to build up their Bitcoin holdings. This absolutely does not indicate a bear market. This still truly speaks of a mature bull market. What one must understand now is that there was an analysis by JP Morgan, and it showed that last year 28% of the Bitcoin increase was driven by MicroStrategy, and the rest were probably the Bitcoin inflows, because over $100 billion also flowed into Bitcoin there. This means MicroStrategy and the Bitcoin ETFs were responsible for this price increase last year. They were the key players, and currently you can see that there are no further inflows from them. Accordingly, we are not rising, but that's just how it is. However, this will certainly change soon. Once we have some clarity regarding the USA, and especially if we see further monetary expansion, because if we see this monetary expansion, which is expected in the coming months as announced in the USA, we will also see entirely different money entering the markets. Because these two data points show us that in the last year or the past months, it was mainly the big players who were buying. However, they have not yet sold. Of course, they still want to sell, and they naturally want to make good profits. They only make these profits with retail investors. Retail really enters the market when we see a monetary expansion here. Then a significant amount of capital will be flushed into the markets again. And that's exactly when they can sell at a higher price here. According to all the on-chain data for Bitcoin, you can say what you want, but we are far from being in a bear market. Nevertheless, we are currently experiencing this tough phase, which is simply manipulated, where we are easily deceived even though we can see in the background that the really big players who steer the game here are not fooled. They keep buying more and more. They still believe in it, and that says it all. We also simply see in the background that the stable coins are being built up more and more. This alone only shows us that we have a lot of capital on the sidelines. This capital is waiting here to be invested, but is not quite ready to invest yet due to certain uncertainties. Due to monetary policy because of the tariffs. But once that is settled, this money will flow into the markets. And these are really now over $200 billion that are just parked on the sidelines in stablecoins. Very important facts. So right now, it's not so nice that we are seeing outflows in the ETFs. So it can be noted that not much is happening with the ETFs at the moment. MicroStrategy is not investing aggressively at the moment. That alone ensures that we don't see any further price increase here. But what do we need for this overheating? We need these institutions, but above all, we need the retail investors. And we haven't really had the retail investors in the market yet. Sure, we've had some retail investors in the market. But if you compare the whole situation today with the year 2021, we would need at least twice as many retail investors as in 2021, because now TikTok, Instagram, and such have been added. We haven't seen that yet. We can only see this overheating when there is a lot of retail in the market. Then we would probably also slowly see the big players selling. Currently, they are still buying. And all of this does not indicate that we are moving into a bear market. This indicates that we are still completely in a bullish uptrend. That's why this is currently just a stagnation phase, another one. And after that, it continues. However, these stagnation phases are also getting longer and tougher. At least that's how it feels. This is simply because the market makers are stretching the game a bit. The Bitcoin ETFs predominantly make money during the bull run. That's why they are stretching the whole thing a bit. The market makers, the exchanges, make more money when there are more people here. It's bad for them if the Bitcoin price crashes overnight and no longer rises. That's why we simply have these stagnation phases. Money is continuously extracted here. And that's the purpose behind it. That more money is extracted here. Extracted from the markets, taken out. That's why these stagnation phases are deliberately made this way. One should be clear about that by now. What is also positive is that we are seeing more and more Ethereum outflows from the exchanges, which also suggests that we will experience better times with Ethereum as well. And that Ethereum is also not moving into a bear market, because otherwise these whales wouldn't be buying so aggressively here without reason. Yes, and at this point, I hope I was able to explain to you why we are currently stagnating so much. Partly because of the biggest player, MicroStrategy, and because of the Bitcoin inflows. That's the only reason we are not performing better. But it's not all because of them. Last year, everything depended on them, but this year, we need a few other things that are crucial here. Otherwise, I think you can see it quite well here again. Actually, only the big players are buying, while retail is selling. The data situation, the on-chain activity, the charts, the indicators do not point to a bear market. And yet, it's already being talked about in the mainstream again. Some assume that we are slowly transitioning into a bear market, that it's already over, and so on. While on the other hand, we see the people who really know what they're doing continue to accumulate and remain optimistic. We shouldn't listen to what they say or what we see. We should look. What are the people who really know what they're doing, the whales, the smart money, and align ourselves with them? Because even with Bitcoin ETFs or MicroStrategy, even if they are not currently buying, they are not selling significantly either. Bitcoin ETFs still hold over $100 billion. These are all still very, very good signs. I hope I was able to explain and demonstrate this to you properly today. If you enjoyed the whole thing, you know what to do. And until next time, friends.